G'day, welcome to the Australian Property Podcast. I'm Pete Wargent from AllenWargent Property Buyers, and I'm here with Chris Bates from the Alcove. Chris, how's things?
Doing well, Pete. Survived my daughter's fifth birthday party, which is huge. 35 plus kids running around, and no, she had a good day. She was super excited. The come down on the other side was pretty hard for her. The excitement of 2 days, you're a lot to process for a 5-year-old and the parents as well. So that kept us busy last week. Nothing going on this weekend, Pete, to report on besides a bit of football and taking it easy. What's been happening in your world, mate?
Well, we've got a sleepover this weekend. Yeah, it's been a weird kind of week for Southeast Queensland and Northern New South Wales. We had the neighbours had all the sandbags out. Everything was shut really for a couple of days, including all the schools. And then, as it transpired, the cyclone basically went further south than us. I think Gold Coast got the worst of it. A lot of outages down there. Brisbane got a huge inundation of rain in one day. I think it was over 250 mils in some spots. But for Sunshine Coast, we got a bit of a breeze and a bit of rain, but really nothing that would normally even constitute a major event. So it was kind of odd because the kids had built like a mock-up cyclone shelter in the lounge room, and everyone was stocked up and prepared, and it was a bit of a non-event for Sunshine Coast. So yeah, I mean, it seems to be that probably the worst of it was further south, and even in northern New South Wales as well, I believe. So yeah, hopefully a quick clean-up for people down there, because I know it's been a difficult week.
Yeah, I think it hasn't been as bad as people were expecting, but for some people, it's probably worse than they expected. So hope anyone listening to hear you're doing all right. I'm actually going to the Gold Coast in about a month's time for Easter. And so, yeah, we're going to see if the beach is back. It looks like the White Cliffs of Dover at the moment there. So we'll see how the beach recovers.
It's take a while, I think. Yeah. I mean, we've got the same thing here, the scarping, but that's not that unusual. But Gold Coast is just such a long strip of sand. It's going to take a lot of time, I think, to get things back to normal there, which is a shame because it's one of the main draw cards of the Gold Coast, of course. So yeah, but hopefully things are back up and running, at least from a power perspective for most people now, and onwards and upwards.
Yeah, I mean, it's an interesting time of work as well. I mean, definitely you'll see it this time of year. There's usually a lot more people purchasing and transacting, which is always exciting time for us as brokers, right? And same as you as buyer's agent, right? People, once you get that signed, sealed deal, you get that exchange contract, you can finally celebrate. Never celebrate till that point, which you would know. But once you've got that deal done, it's pretty exciting. So over the last few weeks, we've absolutely, which is always the time of year where, people are transacting. But it's interesting, Peter. I wonder your take on this. Middle of March now, usually listings start to drop off as you're getting closer and closer to June and winter. You've got an election in there. You've got Easter, Anzac weekends. You've got school holiday break. Like, there's not that many weeks left, I guess, of the autumn campaign for fresh listings to come on.
Yes, I mean, I think it depends a little bit, I think, on which part of the country you're in. I think in Brisbane, things have been kind of steady for us. Same for Sunshine Coast. I do note, though, that sentiment is picking up, as we probably, I think, did predict. I think if you look at the sentiment for Victoria, so Westpac put out their monthly consumer sentiment survey that looks at things like economic conditions, family finances, but in particular for housing, house price expectations and time to buy a dwelling. And both of those for Victoria have picked up very significantly over the past 2 months. So I don't want to be premature on that, but it does seem as though sentiment has really turned a corner for Melbourne and Victoria. And that usually, if you track the data back over as far back as it goes, that usually does sort of preempt an upturn for the market. So I think it probably depends a little bit on which parts of the country you're in. Brisbane, things are ticking along just fine. I've seen some big results out in suburbia in the last couple of weeks, but it's not manic or anything like that. There's a reasonable number of listings as well. I think things have probably a little bit higher than a year ago in a lot of the cities. There's just a bit more choice. So, yeah, but it's interesting. You sent me an article this week from Sydney Morning Herald on which are the most advantaged suburbs. And it said it may not be the suburbs where you think. So there's suburbs like Schofields and West Colby. So some of those sort of suburban areas to the northwest of the CBD. So that was kind of an interesting report. What are you seeing with your clients? You're getting a lot of home buyers and upgraders transacting at the moment?
Oh, it's interesting. There's always first home buyers out there, and we love working with first home buyers. So if you're in that camp, definitely reach out. We love to help. We're actually launching a new podcast to help first home buyers because it's just so much value we can add there. But upgraders are an interesting one. They sort of come and go, like investors. They sort of come in the market when they're confident over their short-term work prospects, particularly, and they feel if they don't upgrade now, they're going to regret it. So they do need that little bit of urgency created because they've already got a house. Life takes over. You want to enjoy, you go on holidays, and that they keep pushing back that upgrade. But I feel like once they know, hang on a sec, if we don't upgrade now, we don't prioritize it, we're going to regret it in the future. And the thing that usually gives them the need to take action is the fear of the pain, or the actual pain itself, where maybe we could upgrade, but if we don't do it now, that gap's getting bigger. Oh, no, we've got to do it. And I think we're starting to see upgraders bring their plans forward and reopen those conversations they've had over the last few years, because a lot of the time they just kick the can down the road. I'm not sure if you've seen something similar, Pete.
So I think a little bit. There's certainly a lot of, certainly a lot of uncertainty around at the moment, just globally. If you look at just the vibe of a lot of headlines, you're starting to see a lot of things about, Trump tariffs, Trump-cession, recession risks rising, a lot of interest rate cuts in various parts of the world, like Canada. So I think a lot of those things, they do feed into a general sense of inaction. I think, you made a good point on the first home buyers, because I think we're just looking at some of the stats this week, and rental vacancy rates were up a little bit across all of the capital cities, SQM put out. But my general thinking as a first home buyer is that it might seem as though we're ancient and we never had to go through this, but I remember exactly what it was like trying to save a deposit to get onto the housing ladder in Sydney. It's tough. You have to forego holidays. You have to have cheap trips away if you can even afford that. You've got to scratch the nights out, get everything together, because even though rental vacancies might have ticked up a little bit, 1.3%, it's still a horrible environment to be a renter. My general thinking is, even if it means moving further out from the city than you want to be, even if it means foregoing some expenditure for a year or 2 years or whatever it may be, it's obviously easier for people in two-income households. I think it's really tough if you're on your own and you don't have parents to help out. But I think, yes, in the upgraders, we've seen a bit of inactivity or just uncertainty. But I think for first home buyers, there's often government incentives that can help you. And the sooner you can get on the ladder and start knocking down that mortgage, well, the closer the second and third steps then become.
So let's crack on with our three. We usually do 3 stories on these 2 cents episodes on Sunday mornings, but now we're actually adding in 3 questions. Should we crack on with those first, Pete, and then get stuck into the stories?
Yeah, let's do those. So thanks for sending in your questions. You can find the links in the show notes. So let's go through a few of these. So here's the first one. It was an anonymous question, this one. The others did have names attached, but let's go with this one. So Chris mentioned property cycles and ideally holding a property for at least 2 property cycles to see returns. How long is a property cycle typically in Australia, and what exactly is a property cycle? Well, I think, to start with the last bit, a property cycle usually has a period of flat or even falling prices in nominal terms, and then you generally find that developers pull back until the demand picks up again. So most parts of Australia have population growth, and then you start seeing rental vacancies decline, and then rents start rising, and eventually you get to a point where there's enough demand for prices to start rising again. And then you do get into the boom phase of the cycle, where a lot of people feel like if I don't buy this month, I'll be paying more next month. I've just got to get in. And it becomes this kind of self-fulfilling upward spiral. And once prices go up, then the development starts again. You see the cranes appearing, and then eventually there's enough supply that things calm down again. So that's basically a cycle. I think history shows, 7 or 8 years might be a typical full property cycle for Australia. It might vary a bit. But I think what the question there is alluding to, Chris, and I think I've made similar points in books previously, that it often takes 2 full property cycles to generate a meaningful amount of equity, because the first property cycle, you see the price of your property go up and maybe you've knocked down the loan a little bit. But then you can potentially take out some of the equity, either to upgrade to a bigger and better place, or you can take out some equity and buy an investment property. But then when you get that second property cycle, that's when you suddenly see, you've got a bigger asset base that's growing for you. And that's when you start to see some sort of meaningful returns. Does that make sense?
Yeah, I don't know if I've actually ever said that, so I do apologize if it might have been Pete who said that. I mean, my philosophy is that really I'm a buy and hold believer. I think that, you make your money on property not over, 7 to 10 years. It's just kind of what we're talking about here. But, 20, 30, 40 years, it sounds crazy. But if you think about most investors, I believe should be in their 30s, 40s, maybe their 20s if they're, a little bit more switched on than their friends. But often it's in their 30s, 40s, and often it's usually around after buying their first home or doing a renovating and upgrading. And they go, hang on a sec, I really want to do something for my future and my kids and my retirement, and I want to invest. And I think that's when you go, well, if you're 30 or 40, realistically, why would you ever sell it? And I think that's particularly until you're in later life. So, you've got your property, you've got a good piece of land. It's like going to always be a sanctuary. And, it's a great piece of land that's always going to be super valuable and desirable. And you hold it, right? And over time, that piece of land goes up in value. You've got a property on there that you consistently can just rent, and the rents go up. And 10 years down the line, you go, it's still a good piece of land. And the rent's got up and it's more affordable now. And then you hold it for another 10 years. Oh, it's still a great piece of land. It's even more desirable. I would just say if you're ever going to hold property long term, that's why it matters so much that you do buy in a part of a city and a pocket of a city that's likely to outperform the general city growth. And then even within that part of the suburb, you buy one of the better properties in that suburb that's going to outperform that suburb. And I think if you're going to hold something, 30, 40 years, you want to hold an asset like that. So that would be my belief. So hopefully that helps answer the question. Should we go on to number 2, Pete?
Yeah, that makes sense. Just on a related point, we got a valuation from a bank through in the UK. I think it was Lloyd's or one of the lenders over there for a property that we've held since 1996. And I mean, it's always a pleasant surprise when you see the returns over that kind of period, nearly 3 decades. But within that, you can have periods of like 6, 7, 8 years where just not very much happens. But you do tend to be compensated in those periods by potentially rising rents. The mortgage is getting inflated away. I think, I've come to the view that I might have my core assets that I'm just never going to sell. In a city like Cambridge, near the station, near the city, it's a very good asset. But then you might have other properties that are middling and maybe you trade a bit more.
Absolutely. That's true.
Yeah. So anyway, let's have a look. Second question. This is more a question for you, Chris, than me. From Juan. What are your thoughts on these 0 to 2% deposit non-bank lenders that are popping up? I started looking into it as an alternative to waiting around for a couple of years to save a deposit for a house upgrade. I'm currently in a tiny 1-bedder, but we want to have kids. I'm a high income earner and would have it paid off quickly. The possibility of getting priced out is high, but the risk involved with a 2% loan just sounds like a terrible idea. What do you think?
I don't think it makes a terrible idea by putting in a small amount as a deposit to buy a property, because the reality is if you buy a good asset and you can service the mortgage, then putting in 2% to get the growth on a good asset, particularly if you didn't have to pay stamp duty. So I don't think I'm too concerned about putting a small deposit. A lot of people think that's risky, right? The risk goes down to the asset you buy. So not so much the money you put in, because if you buy, put no money in, or you put so just be careful around thinking like that. A big mortgage, you do need to make sure you can service the mortgage, right? And so you definitely don't want to over leverage, where if something happened to your personal situation, all of a sudden you're going to go in arrears and be forced to sell. And obviously, if you're putting in a small deposit, that means because you haven't got much money. And if you haven't got much money, then it means you probably haven't got any buffer. And then you've also got a big mortgage. And look, these type of high LVR mortgages, I do know what he's talking about here. They often come with establishment fees or higher interest rates, much higher than current rates. And so, they can work. I'd also personally explore the government 5% deposit scheme first, because you're going to get decent rates on that, backed by the government. And, you know, a 2% to a 5% might not be a big jump. And see if you can stretch yourself to that. Look, if you can't qualify for that because your income's too high or the purchase price, etc., then you might also want to consider, you know, can you potentially use LMI, and then consider these products as well. So they are a few steps down the line, but the risk isn't just having a big mortgage with a small deposit. The risk is, can you afford that mortgage, and make sure that you can keep paying that? Because if you can do that, then and you buy a good asset, then the risk maybe isn't as big as you think it is.
Yeah, it's a good point. And also, just add one caveat. If you're buying an off-the-plan property, something that's not going to be built for 2 or 3 years, then the risk levels would compound much, much higher, because there's a huge amount of uncertainty as to what might happen between now and the dwelling being completed. So I saw a lot of people get caught out in Europe in 2005, 6, 7, buying stuff that wasn't built or was in the process of being built. And yeah, a lot can change over the course of that time. And that's where a low deposit can really come unstuck. So let's third and final one for this week then. Thanks for sending in your questions. From Mrs. Doubtfire. If the point of manufacturing equity is to add value to an asset that's priced a particular way in the existing market, why would the property after the value add, floors, painting, landscaping, kitchen, and so on, still be valued the same as when it was crap? Just quoting there. Even when the comparables are the same as the initial purchase price. Is this due to banks minimizing their downside with lending restrictions, or a lack of comparable properties in the area? So I think what they're saying there, if you buy a property that needs a full renovation, sometimes even after the renovation, you just don't see that much of an uplift. Chris, you're in the mortgage game. I guess when banks are looking at a refinance, I think you probably find that valuers will lean towards a more conservative valuation overall. There's not much upside for a valuer in sort of going in with a bullish assessment of a property, even if it has been renovated. But do you see much of that as a mortgage broker?
Look, it definitely is a low value and a conservative valuation that often happens. However, more and more banks are using desktop valuations, which are done via a desktop. They're not actually going and doing a short form valuation where they go to a property and take some photos and do some measurements, etc. And often those desktop vals come in okay, you know, and particularly properties that maybe aren't renovated, you know, really nicely. They look at some comparables which are better than yours. And so, yeah, I mean, I think that when you say manufacturing equity, it doesn't really matter what your valuation from the bank is. True manufacturing of equity comes when you sell it one day. So you spent, you know, 50,000 on it, but you added 150,000 because you were really smart on how you put that 50,000 into the property. You tidied it up, you removed some things that seemed to be big negatives, and now they're not negatives, and now they're actually almost positives. And so you can definitely manufacture equities by just looking at properties a little bit different.
I think in the UK, the traditional model is buy, renovate, refinance, and then you could go on to the next property and the next. I think it's a little bit different in Australia because the amount of money you can borrow is likely to be capped. You don't have the same lending to professional investors rules that you have in the UK. And also things like land tax start to become an issue as you grow your portfolio here. So yeah, sometimes it's just a value add to your portfolio, maybe doesn't improve your financing situation. So, okay, let's go through the big 3 news stories of the week then. So the first one on the floods impacting insurance policy. So we'll put a link in the notes, Q&A. I think ABC did a panel discussion on this, which is worth a watch. I mean, look, it seems like from a flooding perspective, a lot of the usual areas were impacted in Brisbane, so around Oxley Road and some of the Kedron Brook and all those kind of areas. But I mean, overall, it seems to be clearing fairly quickly. I suppose the question is, a lot of people are asking, can we blame insurance companies? They're not covering all households, and sometimes they're just seemingly ripping people off with big increases in their insurance premium. I think it's important for a home owner to really read the terms and conditions of insurance policies, because sometimes they don't even cover things like storm damage. And certainly some areas, notably Lismore in New South Wales, have almost become prohibitive for insurance policies. It's either extremely expensive or you just can't get somebody to insure your property. And I suppose that raises the question as to whether the government needs to get involved and either sort of do some buybacks to help people move on somewhere else or assistance to find a new place. Because at least parts of this hasn't been helped by building on floodplains or flood-prone areas. But this is obviously a massive issue, Chris, because as sort of the awareness of the potential for major events increases, I think insurance premiums in flood-prone areas in particular are only just going to become more prohibitive.
Yeah, on the Elephant podcast, we've done a number of episodes in recent times around sort of fire, flooding, insurance, climate risk, etc. And it's a huge topic that I think maybe been pushed, kicked down the road a little bit in the past, but now it's becoming more and more prevalent as these sort of environmental impacts, because where we've built a lot of our property is on our coast and our rivers and along our beach fronts and etc. And usually these places are getting hit quite hard now, and so and the impacts on a dollar figure can be absolutely huge. I think that's why there was so much fear around good old Alfie, is that if he was going to hit the East Coast where our expensive properties are, what was that going to mean for our country, rather than a lot of cyclones hitting, say, the West Coast where there's no houses? It's not such a big deal for damage. I mean, is that your thoughts there as well, Pete?
Yeah, so the RBA has done a paper on this previously, because as you said, I mean, even by the virtue of seeing Cyclone Tracy and cyclones that go all the way from A to Z, we get a lot of cyclones in Australia, but they largely impact mining and resources in the northwest of the country, or places like Darwin or far north Queensland, where people are far more set up with things like cyclone shelters. In Darwin, it's practically been rebuilt over the past 50 years. So the housing and all buildings are really built to withstand that kind of impact. But that's not really so much the case if you get down to Brisbane or Gold Coast or northern New South Wales. We've still got a lot of older Queenslanders and shacks that could be very dramatically impacted. Yeah, I mean, the RBA, I'll have to pull up the paper, but they do predict that over the course of the next century, we could see a significant percentage of the housing stock impacted by changes to the climate. I mean, nobody really knows. I suppose a skeptic might say, well, who really knows what's going to happen over 100 years? But it's definitely a possibility. And I think sometimes for an investor or a home buyer, the issue is not so much even the damage to the property. It's just, what if you can't insure it? What if you can't sell to the next person? Could impact your ability to grow equity. So even if you don't experience a flood event or a fire event, you could still be impacted adversely just by the change in sentiment, if nothing else.
Yeah, I think it's going to be a big issue for insurance companies. And, if they've got higher exposure to certain suburbs, and, they're going to want to really minimize those risks. But I think in the US, the insurance companies were completely different, and they basically avoided areas where all those California fires were, because the way the insurance system works there versus Australia. But insurance is meant to be insurance. I think it's meant to be, you spread the risk a lot across the policy holders rather than one person carrying the bag. And I don't think people not getting insurance is a good option. I think this is where governments do need to step in and try to protect property owners, because if you could say parts of the country and parts of suburbs just aren't insurable, well, banks won't want to lend into them. And then what happens to all the property owners in those suburbs? And they're not worth anywhere near the same if you buy them with cash. And then that's not great for our banking system. So I do think it needs to be an outcome, but you can't just say one insurance company has to take the risk, because they'll say, well, I want X amount of premium. And so I'm not sure how they're going to solve these issues, but it's just part of the overall climate story, I believe, to how we protect assets as our climate shifts.
It sure is. Let's have a look at this second story. So Michael Yander at ABC News Business, how Australia's property market spun out of control and what we can do to fix it. So this article probably took a couple of full months of research for Mike to put together. So well worth a read, and we'll link to it. Some of the questions he's posing: are investors to blame for the property crisis? What about tax incentives like the capital gains tax discount and negative gearing? And also, would reducing investors increase the number of first home buyers? So I think the answer to that question is probably yes, because you do get something of an overlap between the two cohorts anyway. Sometimes in previous cycles, we saw people just continuing to rent and just getting an investment property to get a first foothold on the ladder. I think, I mean, the issue for Australia is we've got high population growth and we've got very, very significant aggregate wealth. And the wealthier populations get, the more they tend to spend on rent and property. That's just seems to be the way things have gone historically. Dr. Cameron Murray has done some good research on that to show that the amount of people's income they spend on housing, it doesn't really change that much. It has increased for the lowest income earners in the country, but for most people, it's still in that 20 to 30% band. I think, I mean, there's definitely a macro versus micro question here, because over the past 15 years, we've seen a lot of changes that have been quite punitive for investors, changes to depreciation benefits, tenancy rights. There's been no end of things that have kind of made it harder to be a landlord. And at the same time, rental affordability is now at an all-time low. So rents are up 40% since the pandemic came along. It's a horrible environment for renters at the moment. But then at the sort of, if you go down to the state level, Mike would point out, well, yes, we've seen a pullback in the number of investors in Victoria, but actually first home buyers have picked up, and the rental market certainly seems to be no worse in Melbourne and Victoria than anywhere else. So maybe winding back the benefits to investors could work. That's his argument.
Yeah, I think that there's a really nice little snapshot in that article, basically slowing down population growth. I don't think it's that simple. We do need a lot of people moving to our country. We've got labor shortages in lots of areas. They support our university, which is a huge export of ours. So I don't think it's as simple. And I think you've got to be careful looking at a gift horse in the mouth. And I think that's just my view on that. But absolutely, enormous population growth we've had over the last couple of years might have been too much. And but I don't think, even if we have a belief of whether you want no immigration or you want lots of it, the reality is the system is built on migration into our country. And, a lot of people who are here now have benefited from that. So got to be careful there. I think, planning restrictions and speeding up approvals with councils, I think that's absolutely a no-brainer, I think. But, governments and state governments and councils, I do think are working better there. I think they want a much simpler system to get more things getting built, particularly when you look at the supply pipeline and what's coming. Strengthening lending rules, I think, is a really good idea. When rates are low, don't let people leverage up to the nth degree, I think. But we've seen a huge pullback already from 2014. So I don't think we're going anywhere near that type of lending. So maybe it's been a past issue that's caused a lot of boom in prices, but I don't think lending's that loose anymore. And rolling tax breaks to investors. Yeah, I mean, whether you talk about negative gearing is one thing, but, maybe the conversation, but you got to be careful, right? Is a lot of people want to build wealth for their retirement, which is a good thing because it takes people off the pension, and it's good for people to provide housing for renters, etc. So you want to encourage mum and dads and people to get into the market as investors. But so changing their tax breaks may reduce that. When you've got a rental crisis and a growing population, is that a good thing? But maybe changing the CGT discount. But what you're basically saying is you're going to tax capital gains more alongside nearer to income gains, and make sure that it's not people just investing more and trying to keep their incomes low. So but if you change tax incentives, people change their behavior. And so just be a little bit cautious there, because the unintended consequences can sometimes bite you in the butt.
For sure. I mean, we've seen this in Europe. They've just made it more and more unattractive to be a landlord.
Exactly.
For so many people. The people just sell up, and then who's going to drive the new builds? That's the thing. It's, yes, you get some first home buyers who want to buy a new home, but you just end up with a shortage in the housing stock. Generally in Australia, you find the investors amplify the cycles on the way up and down. And if prices are going up, investors are more inclined to get in the market. They buy some of those off the plan units that we don't particularly like, but it does help to drive the growth in the dwelling stock. I mean, I think reducing or sort of cleaning up the planning restrictions would really help to remove some of the red tape. But I'm not. Maybe that flexible lending assessment buffer, I think, is a smart idea, just to smooth out the cycle a bit more potentially. I think at the moment it's probably too wide. There's so many people who would like to take out a loan to buy a first home, or even a rental, but they just can't get access to the finance, and it's that's probably constricting supply as well. So yeah, let's wrap it up this week, Chris, with the third story. So apartment cycle turns the corner. So building approvals hit the highest level in 25 months in the last month of data. So that was driven by an uptick in high-rise apartments, particularly in Sydney, but also in Melbourne and Brisbane. I think January is a really unpredictable month for picking this stuff, and there's a big seasonal adjustment that needs to be made. But it looks overall that house approvals are kind of leveling out, but apartment approvals now should start to pick up as developers get a bit more confidence about construction costs and interest rates. I think if you look at this financial year to date, we've approved about 107,000 dwellings. So it's quite a long way short of the 20,000 a month we would need to meet the housing accord target, which would be about 140,000. I think it was quite interesting to see Claire O'Neill MP this week tweeting out that Labor is building more houses than when they were elected. I mean, it's not strictly speaking true. We've had one month of building approvals that's picked up a bit, but yeah, I think it might be a stretch of the reality to say we're building more. I think housing starts are well down on where they were a few years ago. Certainly the number of dwellings under construction is down from about 240k to 220k. So I think we're turning the corner. I just don't think it's really picked up just yet. Also, just to finish off a paper from a friend of yours, Peter Tulip, who wrote about, although we do build units in Australia, particularly in the previous cycle, we often build them in the places where they're not adding as much value to home buyers as they should be. So areas like Parramatta and Strathfield, rather than closer to the action where, like in the eastern suburbs of Sydney, where people would really benefit from more supply. But it does seem maybe we're turning the corner now.
Yeah, I mean, Peter's a great bloke in terms of, he's sort of on the older end of life, in complete respect to you, Peter. But you're also looking out for the younger generation. So hats off to you. You're friends with the Yimbies, even though you probably should be a NIMBY. And so, but absolutely, I think what I like doing, I said this years ago, this isn't one of those moments I've said that before, but I remember thinking years ago that the quality of the apartments that we're going to build in, 5-10 years time is going to be much better than the apartments we're building. Like everything in life, I think we're going to get better at it. And whenever a new development comes in, I just love looking through the features of them. And, I just saw one yesterday, number plate recognition, as a new tower in Kirribilli. And, it's an old Art Deco block. I think this reduced supply, by the way. I think it was 7 full floor apartments. The top level is going for 60 mil or something like that. So it reduced, 28 apartments or something like that. I can't remember exactly the number. And it reduced it to 7. But those apartments are selling, for 10 to 60 million. But yeah, I think that the quality of apartments are building and the features within them are much more family friendly and, much more sort of lifestyle hubs. Similar to what they've been building a lot in Asia, I think we're going to be building in the future. And so approvals and commencements, Pete, different things. So just never get too excited by approval numbers. What actually hits the shovel to the dirt, even though they're probably using an excavator, but what actually starts is probably the more important number.
Yes, so we'll put a link to Peter's paper there for the Centre for Independent Studies, because it's actually pretty useful for anyone who's thinking about buying a unit potentially, because you'll see that there's certain areas, Northern Beaches, Randwick, Waverley, Woollahra, where we just don't really build. There's the supply in places like particularly Manly, Woollahra, it rarely changes very much at all. There's a percentage of the housing stock. But then there's other parts of the city like Parramatta where a huge uplift last time in the previous cycle for the number of units. And that has a real impact, not just on things like traffic and livability, but just the sheer volume of supply will dampen prices. So it does mean at various points you might pick up a bargain in those areas, but also means you'll get a much more volatile property cycle. So a few things to watch out for there, particularly if you're one of those people who likes to buy new, because there's extra risks there, as we often talk about. So so it sounds like a quieter weekend ahead for you, Chris.
Yeah, absolutely. Nothing exciting to report on here. But what about yourself? What's you got any removing those sandbags? I mean, what are all your neighbours going to do with all these sandbags?
No,
I feel like
they'll be eating they'll be eating ravioli for weeks. I think all of the Woolies and the IGAs were completely stripped bare for a few days. It seems to be the new thing now. Everybody stocks up on toilet paper and tinned food. But yeah, we've actually got some friends coming up from the Gold Coast for a bit of a sleepover and a kids party. I think they had four or 5 days maybe without power, and I think the water was off for a while. So I think they'll be quite pleased just to come and, I was going to say chill out, but they usually don't sleep very much. But at least get away and yeah, enjoy some time off, because it's been a pretty tough week, I think, down for the Gold Coast.
Yeah, absolutely. Well, enjoy that, Pete, and enjoy the ravioli. We'll chat next week.
Sounds good. Come and join us on the Rask community forum. It's community.rask.com.au. Come and join the chat there. Got questions for Chris on mortgages? Chris at the Alcove. You can find these details in the notes. And I'm Pete Wargent from AllenWargent Property Buyers. Thanks for joining. We'll see you next week.
See you next week. See ya. Bye.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.